From the government's point of view, I think we have met a number of times. The year has shown to be another tough year. Now, we have been rated by rating agents and we have been classified by others. This exercise that we yearly undergo with the IMF has a little bit of a different take, and that is it tries to map out the way forward. It tries to find out whether the steps that government has taken are the correct ones, and whether the outlook that we have shared with the public is relevant and correct. So I'm very happy that from government's point of view, we, with both missions, can say that we had broad agreement when we judged the situation of the economy, the status of the economy, but even more so the way forward. And we are therefore thankful for the openness of the discussions that we enjoyed. It's not always easy to talk about tough situations and difficult challenges, but the very purpose is to get better in the future. And I can say that we had very extensive, very frank meetings in both missions. And yes, we agree broadly on what the outcomes are. And on this note, I want to start with you, Jeremiah. Maybe you want to give your statement first.
Yes. Thank you, Minister. First of all, I would like to thank the Minister, the Governor, for the hospitality. As the Minister said, this is an Article 4 mission. We do this mission in all member countries of the IMF. The purpose of this mission is to look at recent developments, assess the outlook, and have discussion on main policy issues. So, for this press conference, I would like to sort of give a brief overview of what have been our finding and discussions, and at the end of the conference, you should receive a press release, which is under embargo till the end, I think, at the end of this conference. But to start with, I would like just to go through some of the main issues. We came last year, and I also was here last year, so I'm not new to the country. The country had gone through a period of exceptional growth till 2015. Last year, the growth started coming down, decelerating, and the economy entered in a phase of adjustment. We see the economy continue this phase of adjustment. At this point, we have very preliminary data on growth. Based on this preliminary data, we expect a slight negative growth this year, but we all have to wait for the release of the third quarter to have a bit of a more firm view. This would basically means waiting 2-3 days. The release is expected for December 14th. What I can say with certainty that we expect the economy to continue to adjusting, and but to recover over the next 2-3 years, thanks to the strong mining that reached more or less topping around 4% of GDP. This is the growth rate for the projected between 2019-20, so it will slowly go up. Of course, these are just projection. We see there may be risk, there are factors that cannot be forecast. Probably there are two major factors here in this economy that may change, improve, or deteriorate this outlook. One is the volatility of the cycle revenue that may affect both the external side and the budget. The other things that we see maybe a relevant factor is the credibility of fiscal policy and the fact that there was slippage last year that the authority will have a fixed, but in the future that is a sort of element to anchor all the policy discussion. Now, when we go forward, clearly in this situation, the challenges are two. One is to accompany the economy, adopt the right policy to accompany this adjustment process. It is to maintain the macroeconomic stability. The other one is in the background. This is a country with high inequality, high unemployment, so we need always to keep in mind that whatever policy we do has not to come to detriment of the long-term objective of reducing the unemployment and therefore address over time the inequality. Now, from this point of view, we, the ministry and the central bank, they're already taking action. I mean, the ministry has already started the policy of reducing the deficit, and the central bank is clearly having a strong hand on supporting the financial stability of the entire, not just the banking sector, but at this point they are expanding to look to the general macro financial risk in the economy. However, given the trends that we see in the economy on the fiscal side and the external side, this trend calls for attention and additional actions. So let me go through 3 different areas with respect to the policies. The first one, of course, of interest to everyone is the fiscal. What we see that SACO revenue are going to decline over the next few years, and this requires additional adjustment from the budget point of view. The most important part of that side is the policies that need to be adopted to do this. Clearly, there has been in the last few years, as the economy was booming, a fast-growing spending. There were items like transfer to entities, salary, they were growing very fast. Today, they constitute about 70% of the total spending of the government. And this is an area where a policy may be anchored going forward. Clearly, given the area of last year, there are like reforms to do more on the structural side, on reforming the public enterprises, to review a bit the mandate of all the extra budgetary fund that are absorbing a lot of resources from the central budget. The other area that we have paid a lot of attention, as the minister was saying, there's been like a specific mission, the financial assessment that led by Code, which happened in September. Here, just summarize, and then you should feel free to ask Paul any questions. The financial system remain sound. The mission clearly, the purpose of the mission was to identify risk and how to manage this risk. So they focus a lot of attention on liquidity monitoring, on the non-performing loans and how they can be registered, on how the central bank can strengthen what we call the macroprudential role. So beyond the monetary policy, if you have like, for example, in the case of Namibia, fast-growing housing prices, there are tools that can be used to avoid the creation of a bubble. The central bank, the ministry introduced effective this year, for example, loan-to-value ratio. Basically, everyone who has to have a mortgage has to have at least some equity down. This is a way to control dynamics, which may be harmful for the economy over the long term. Finally, as I said at the beginning, there is in the background this problem of the high unemployment. Now, what actually is the challenge that we see for Namibia is that the country is going through a demographic transition. By 2050, more than 60% of the population will be in the working age group. So this requires the economy to start thinking today. It looks like a long term, very far, but it's required to look today at what kind of policies may create an ability of the economy to hire more people, because otherwise what would be an opportunity? More people working means high potential growth, but it may also create the challenge of high unemployment. So from that point of view, there are 2 issues that seems relevant, and here I talk in very generic terms. One is on the labor market, there is a high asymmetry between the skills required by the market and the skills provided by the education system. and that creates a sort of like a block on the market, and implies that not everybody goes on the market to find a job, even if the job is available. And the other elements is when we look at smaller firms, the idea of having a business environment that helps people, that we are still like, when we look Namibia compared to others, that it ranks well in the continent, but Namibia, I think it should aspire to something higher than that. So when we look at a more ambitious set of country, Namibia has room for improvement, and there is a lot about the business condition that can be done. As I said, the end of the mission this is just the end of the mission. Early next year, everything will be wrapped up in an official report, which will be published, and the report will be published together with the financial sector assessment. So I'd like to stop here and then leave it to the Minister.
Thank you very much. Paul, you want to say a sentence or two?
Yeah, so thank you very much. I'm Paul Mathieu. I'm the Regional Advisor for Africa in the Monetary Capital Markets Department of the IMF. We were here with a team from the World Bank as well, a joint team this summer, as Jeremy has said, in September, October, to do this analysis. The last one was done in 2006, and international norms on bank supervision and financial stability have been increased and made stronger after the global financial crisis. We did quite a bit of work with our colleagues from the Ministry of Finance, the Central Bank, and then FISA, and produced a number of technical notes and a summary findings report, as Jeremy has said, which will accompany the usual report. And we found that banking supervision is quite effective and sound practices. We made a number of recommendations. I won't bore you with all the technical aspects of that, but to improve things. It's very important in Namibia that there be a very strong supervisor together, both the Bank of Namibia and NAMFISA together, to have a very good view of the consolidated financial groups. So they need to work well together, have the powers to do that, and also with your partners in South Africa, since most of the large banks in Namibia are groups from South Africa. We stress tested the balance sheets of the banks and found them generally resistant to liquidity and other stresses, quite resistant. And we also, for the first time, did an analysis of interconnectedness in the system. You have a very developed financial system for a country your size and of your degree of development. And so we did, and it's very integrated, it works very well. However, there's still a lot of development needs to give people in rural areas and small enterprises better access to finance. So those are the general things. We stress tested also the balance sheets of the pension and insurance companies as well. We made comments on the infrastructure system, the payment system. We drew attention to the need to pay attention to cyber risks going forward, because it's an area where we're seeing more and more attacks, and you need to be prepared for that. So that's a general summary, and again, our report can be summarized and go to the board, and it will be expected to be published along with the other reports. Thank you.
Thank you very much. Yes, these two reports will have to go to the IMF board after we had some time to comment on them. That will happen in February, I take it, end of February, they are on, after which they will be published, if none of the two parties object to it. So that is the process that we take. The floor is now open for questions.
Everything was clear.
Yes, sir.
Good afternoon, Matthias Asuko from the Patriot newspaper. I'd like to know, I think Jeremiah had mentioned something on the public wage bill that is high. Perhaps what is your take going forward? What can be done? Because it seems that our government has been struggling over the years to contain the wage bill. It's been increasing over the years, so there has been measures that have been adopted by cabinet, but we are still not seeing the results thereof. Perhaps maybe just your way forward, as you've been dealing with countries across the world, what is the advice you normally go around giving? Secondly, also, I just wanted to know, and there's been a great emergence of cryptocurrencies in recent years. What's IMF's take on this? Because we've had our central bank issue statement of caution against this, especially Bitcoin and so on. Maybe what's your take on that? How will this affect the financial system of the country going forward?
Thanks.
You want to answer?
Yeah, I can answer that. The wage bill. The wage bill, I mean, I expect I was attract a bit of attention, is an issue of dynamics. No, it's not a discussion about the level, and it's an issue of dynamics. Over the last few years, that we have seen like the wage bill growing at about 20% every year. It was in part is employment, in part is salary, with the salary increasing at the rate well above the inflation on average. If the inflation was about 5, the salary on average were growing about 12%. This is over the last few years. So the wage issue, if we keep these dynamics, they will keep growing. Correcting the dynamics is the real policy area, the area for policy intervention. Clearly, you can correct the dynamics by slowing down the employment, the new hiring, by slowing down the increase in the salaries. This is a sort of area where the government has to take a decision. What I would like to say, which is not in the press release that you will see here, because before I was just at the beginning, I just want to give you like the overview. What I want to say is that in general, after the discussion, this is my feeling. There is a broad agreement with all people we've talked here, with the minister, with the governor, we talked with the prime minister, about this broad agreement on the challenges that we have in front of us, about the policy priorities, including this one, because like I heard the prime minister like saying this quite publicly, and these are the policy priorities to keep the country like fundamental strong. The country is strong fundamental, so given the situation, the policies are required to keep the fundamentals strong. Now this takes time. So that's why when we talk about salary, I talk about the dynamic. I don't talk about tomorrow, today. I talk about like you take a decision today and then over time you will see the result. This is true for wage, this is true for the debt dynamics. It's a question like to have a clear idea where we want to go, take a decision today, and then we have to wait for that policy decision to give the fruit over time. I think for the wage, this is something that applies very clearly in that case. And then the second question I leave to Paul, who is the experts. Stay far from the Chicago Stock Exchange, where now.
Have you invested in Bitcoin?
I have not, Minister. We think that there's a lot of speculation involved in this thing. Clearly, a lot of hype as well. There are some innovative aspects to this. The blockchain technology and the distributed ledger have some interesting aspects to them, which could be of very good use, including in other areas besides payment. And some industrial companies and others have been using, trying to adapt this technology to their needs. But we feel that the cryptocurrencies are really not something that central banks and payment systems need to be getting involved in. The lessons are that payment systems need to be robust and reliable and cost effective, and a lot of the technology is already there. Certainly some of this technology will rub over into the areas to make transactions cheaper and more reliable. That's certainly something we can expect. And in this area, you know, several countries are struggling with loss of their correspondent banking relations, making remittances much more difficult and expensive. Fortunately, that's not been the case in Namibia, because you have a good anti-money laundering framework. So the short answer, there's a lot of froth and a lot of speculation, and we feel that there are some interesting aspects to this, but it's not something central banks should be going out and rushing to introduce cryptocurrencies. Most of the money is electronic already, so that would be our view, a degree of caution.
Maybe on the wage bill question, what we also discussed and where we have agreement is that if you look at wage bill increase and you try to correlate that with productivity, you almost have an inverse correlation. So salaries are increasing above growth, but productivity is declining. In plain language, you get less while you employ more, and you pay more. So if we want to solve the wage bill challenge as a whole, as Jeremiah says, we must look also at the dynamics of productivity in both the private and the public sector. Even more so, if you have the same correlation in our state-owned enterprises, the inverse becomes even more pronounced. Salary increases vis-a-vis production. And therefore the agreement on the review of the state-owned enterprises, but also agreement to look at the wage bill as a immediate challenge that needs to be addressed, albeit over time. Yes, sir.
Thank you, Minister. Edgar Brand from the New Era newspaper. Jeremiah mentioned one of the risks as declining SACU revenue. I wanted to find out, are there any indications from the IMF as to how much SACU revenue will decline in the next few years and how that will impact Namibia's revenue?
I think there has already been an agreement for next year. Probably they just finished last week.
Yeah, I can share with you. Last week we had SACU Council meeting. So our share would be 17.6 billion. We have been overpaid in the previous financial year, so we have to repay about just over 3 billion. So our effective contribution from SACU will be 17.35 roundabout. I can give you the exact figures, but that is the figure. Now, since SACU Council has agreed to those figures, that income is now assured. In the following years, we took a cue from what was in the South African budget, especially in the mid-year budget review, and they projected a slight decrease in the following year, but then a sharp decrease in the third MTF year. And that has to do with import statistics that they phased into their projections. So we are having a situation where our being integrated in SACU, and especially with South Africa, has now a direct bearing on our fortunes, or how well South Africa is performing, how well their economy is growing, how well their import income is growing, has a direct bearing on us, and that is one of the consequences of economic integration. What others do and what others forward into the economic field as policies has a bearing on us. And we are a small open economy, well integrated with South Africa, so that is where we are coming from. So there's a decline, and it's not a stabilization, it's a stable situation with a decline at the end of the third year. And you can add to that?
I think de facto you do have declining cycle. The risk that I mentioned before is the volatility. Now for next year, it's a fact that, as the Minister said, that the pool has been decided. In terms of, while nominal numbers may not change too much, in terms of GDP, the GDP is growing, so it comes down. When looking at the South Africa, it might come, the signal that there is a trend coming down. These are shocks that hit the budget, and they are not shocks that depend on the domestic authority. They just take the shock. That's why I said before, when you set a policy, for example, on debt, you need to be patient and wait, because you may have these shocks and they may delay some of the results. You just need to be constant with if the government decides to adjust gradually, at some point that will give the output, the outcome. The problem is that you get this shock and then some of the results get postponed, de facto.
Okay, this year, just to put the figures correct, this year we had 17.96 billion SACU income. Next year we will have 17.3. Now, we to a certain extent saw that coming, and we reduced our figures already away from the high that peaked at 19 billion. So we reduced it by 2 billion to 17.5, and the additional reduction is about $500 million that we have to compensate for. So it's not the total 2 billion that we have to compensate. But it is big figures, not from 19 to 17.5. So the volatility is the problem. Okay. Yep, Madam.
Yes, I'm Margaret Nuna from the Southern Times. I'm first interested to know, there was a report by IMF on the housing bubble bust and the likelihood that we might have a bust in Namibia. Now I want to know, since then, since you did, I guess, another assessment of Namibia as well, whether we are still in the red or whether there is still this red, these red flags.
Red flag.
Yeah. The second one, there's this general perception among a lot of people. Of course, I didn't do a research per se, but there's this general perception that a lot of these international agencies are actually hell-bent on blacklisting countries, especially African countries, and downgrading them, especially if they do not adhere to certain so-called governance standards, or sometimes it has to do with politics as well, and that they feel that it is mere speculation. And I just want to know whether IMF is aware of this when they're doing all these assessments.
Thank you. Let me start with the housing, which is more articulated. We did the assessment in 2015, the first time. We had last year like an update. The short answer to your question is, as the economy adjusts, also the sector is adjusting. In 2015, we estimated that the market was overvalued on average about 20%. So that means like there was sort of like, you cannot really say it was a bubble, but it was sort of like, compared to long-term trends, it was heated. As the economy adjusts and the credit is decelerating, we assessed this year an overvaluation about half of it, 10%. So the market is adjusting. This is average, so maybe segmented the market, they move differently. And for this year, we don't plan to go to have a detailed assessment as we did in 2015. What we have done this year is just to see if the problem was there, is decreasing. The answer, yes, the problem is getting smaller. Now, the problem is not the overprice per se, is that the banks have a lot of mortgages, individuals have a lot of mortgages, so it's important the prices are more or less right. I would say when we estimate an overvaluation about 10%, they are almost right. I would expect that if we as the economy adjusts, the policies are right, then probably that party will decrease. It will not disappear because there are supply constraint. So that will keep for some segment of the market the price a bit over long-term trend for some years, but there is only one segment of the market. Now, the other question you had about the role of financial institution. We don't downgrade, we don't do this as IMF. So I'm glad that as you saw, we came here after the rating agency downgraded, like Namibia. I like to see more, like in a country like Namibia, where there is always surveillance. I like more to see us as a sort of like sounding board. We come, we try to put things in order, like the question down and discuss with authority and try to get sort of like a conversation going. We don't intervene in the policy decision and we don't downgrade. It's sort of like really economic analysis about the trends, and we actually, in the case of Namibia, we share our macroeconomic projection, we give files in the hope that that helps the policy decision here. I don't know if Paul wants to add something to this.
Well, that's true.
You call the IMF.
Yeah. So international. There are several, right? So, and they compete one against the other to have the most influence. And their reports are, I think, public. You can download them and see. You can read it for yourself and judge whether the analysis is correct or not correct. And of course, as we're going forward, we see some risks to Namibia from these downgrades, and also, especially from the downgrades to South Africa, which is going through a very difficult time in recession, and as we just discussed, the SACU revenues and other things. So, do they get things wrong? Yes, they occasionally get things wrong. Just before the global financial crisis, they got things wrong. So, it's like anything. You have to decide who you believe and what you believe, and it's up to you to make the sound judgment of all the information that's put out there about your country and every other country. But as Jeremy says, we don't give ratings per se, but we raise risks and issues that the government needs to look at.
If I can add, I think the first question is a good example. We came 2015 and we said, look, pay attention to the housing market. It may be a source of risks. Now, the housing market has supported growth, has supported like credit, large expansion of credit, and now it's coming down. So the risk is reducing. So our role has been like in identifying a risk. We didn't grade or downgrade, we didn't do anything like that. And then it was taken as a reason to introduce some policies, like the loan-to-value ratio recently. This is the type, when I say I see us as a sort of sounding board advisor, we just put there the issues and then we discuss. Sometimes they already get convinced they agree in general. I'm not talking about Namibia. Sometimes they have different views. But at least there is a conversation ongoing.
Okay. Anyone else? Are we done? In that case, thank you very much.
And here you have the press release from our side, whoever is interested.
Well, we had a number of press conferences, and I want to take this opportunity to thank the media very much for attending these press conferences, but also reporting accurately on what happened during and what we shared during these press conferences. I think it is our the policy to engage more frequently, to share financial and economic data with the public through you, and thank you very much for helping us to have achieved that. I'm grateful. I hope we can repeat that next year. And of course my hope is that it is not all negative news that we can share. This year was, these events that followed each other, had a little bit of a chain reaction to it. But still, I think we managed together with you pretty well to report accurately and factually what the situation was. So thank you very much for that. For now, you're also closing down. Hopefully you will have a little bit of rest. Merry Christmas. And we will see each other in the next year, which is not without optimism. Thank you very much.